Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The Philippine Purchasing Managers Index just plunged. Factory activity saw its sharpest contraction in over 4 years. A sweeping new internet law aims to finally jolt the Philippines' sluggish broadband sector and open the door to long-awaited foreign competitors. A new House proposal seeks to make a 7,000 peso relief allowance a permanent benefit for all government workers. The Philippines plans to halt pork imports from Spain after the country confirmed its first African swine fever case in decades. The Department of Information and Communications Technology is defending an 8.3 billion peso budget gap amid scrutiny over unallocated funds and absorptive capacity constraints. The Philippines suffers a sharp slowdown in factory activity, with the manufacturing outlook deteriorating in November as the Purchasing Managers Index drops to 47.4, its steepest decline in more than 4 years. S&P Global says that the contraction reflects weakening customer demand, product life cycle shifts, and operational disruptions from back-to-back typhoons. The Philippines was also the only Southeast Asian economy to contract last month, while the rest of the region expanded, led by Thailand at 56.8, Vietnam at 53.8, Indonesia at 53.3, and Myanmar at 51.4, and Malaysia at 50.1. Analysts warn that the downturn could extend into December and early 2026 if business confidence remains weak and the peso stays volatile. Better internet and lower power prices may finally be on the way. The Department of Information and Communications Technology has released the implementing rules and regulations for the newly signed Konektadong Pinoy Act, a major reform designed to cut broadband costs and boost speed services nationwide. The law targets a 40% reduction in internet prices, as the Philippines, now ranked 6th in the Association of Southeast Asian Nations, pushes for more affordable and reliable connectivity. The implementing rules and regulations were completed 30 days ahead of deadline and are slated for implementation before the end of the year. The Konektadong Pinoy Act advances the government's plan to expand competition, open the door to more players, and widen access across the country. Higher labor costs may be coming for both government and private employers. The Trade Union Congress of the Philippines Party List representative Raymond Mendoza has filed the Dagdag Pera Act, seeking to raise the personal economic relief allowance for government workers to 7,000 pesos, a move that could set a new benchmark for compensation nationwide. The bill aims to keep the allowance in step with inflation and with price spikes from natural disasters. Funding would come from the national budget for state agencies, local funds for local government units, and corporate funds for government-owned and controlled corporations. A higher government baseline could pressure private sector wages and benefits, especially in competitive talent markets. The proposed increase would cover national and local government employees, staff of state and local universities and colleges, appointive and elective officials, regular, contractual, and casual workers, and all uniformed personnel, potentially resetting pay expectations across many sectors. The Philippines has temporarily halted pork imports from Spain after the country confirmed its first African swine fever outbreak in more than 30 years, a move that could tighten supply and put upward pressure on meat prices. Agriculture Secretary Francisco T. Laurel Jr. announced a nationwide ban on shipments from Spain, the European Union's largest pork supplier, after the virus was detected in 2 dead wild boars. Industry groups are urging the Department of Agriculture to limit restrictions to affected regions, warning that a blanket ban could disrupt supply chains, raise costs for processors and retailers, and exacerbate food inflation. Several other countries, including China, Japan, Mexico, and the United Kingdom, have issued similar bans as they move to protect their hog industries and prevent domestic outbreaks. Questions over digital infrastructure spending return as the Department of Information and Communications Technology clarifies 8.3 billion pesos in excess funds under the 2025 budget, including 3.3 billion pesos still unallocated. Undersecretary Herson Asidao says that the remainder covers 3 billion pesos for the Bayanihan SIM program and 2 billion pesos for the Department of Education free Wi-Fi projects. The agency says that the funds have not been downloaded or requested and not affect current spending. Secretary Henry Aguda stressed that completing existing projects efficiently before seeking new funding, a key signal for investors tracking digital economy execution and budget discipline. The Department of Energy is cautiously optimistic about electric vehicle growth, expecting 50,000 units on the road by the end of the year. After the ban on e-bikes and e-trikes on major roads, the department is re-evaluating its targets and updating the comprehensive roadmap for the electric vehicle industry. Under President Ferdinand Marcos Jr.'s directive, the long-term goal is 50% electric vehicle adoption by 2040, equal to 2.45 million electric vehicles, supported by 20,400 charging stations. The Philippines has 41,000 registered electric vehicles and 1,260 charging stations, highlighting the investment gap for the private sector and infrastructure developments. The Development Bank of the Philippines is seeking dividend and regulatory relief from the Bangko Sentral ng Pilipinas to rebuild its capital. According to its president and chief executive Michael De Jesus, this move is necessary to strengthen the bank's financial position. The state lender is still absorbing a 25 billion peso hit from its initial capital contribution to the Maharlika Investment Corporation made in September 2023. The bank will seek dividend reliefs for the next 5 to 7 years to support its capital position and maintain development lending. Now, the numbers don't lie. For 10 years, the Philippine stock market has underperformed every major index in the world. A decade when global markets hit record highs while the PSE lost 20%. And even with a bounce from 5-year lows driven by lower yields, strong demand for T-bills, and a credit rating upgrade, investors say that the real test is still ahead. Because in this market, trust, transparency, and accountability, not just valuations, will determine whether this recovery has legs or whether foreign money will continue to stay away. With us this morning is Basil Go, the Vice President and Head of Equities at Security Bank. Hi, Basil. Thanks for being here with us.
Good morning, Maiki. Thanks for having me again.
Yeah, it's always good to hear from you, Basil. Let's talk about, the state of our equities market. 10 years of underperformance. For a decade, we've been the worst performing stock market in the world. From your perspective, what was the confluence of factors that brought about this slump?
Well, definitely, there are a lot of moving parts, but definitely liquidity is one of those factors. If you just look at the PEC value turnover on a year-to-date basis, it's around $100 million. In 2013, it was actually $193 million. So it is not a good trend. No, our value turnover is in fact declining. If you compare us to our peers, Malaysia 500 and other regions like Singapore, Thailand, Indonesia, they're around Vietnam around $1 billion give or take. So it's just a wide different variance from our value turnover from the Philippines compared to the region. And secondly, if we just look at retail participation, the Philippines is one of the lowest retail participation. Around 2% of Filipinos have a brokerage account. If you look at crypto accounts, I read this report from PDAX, 14% have their own crypto account, but there are only 2% who own stocks in the Philippines, which is just a wide differentiation. If you look at our peers, they have around a high single-digit retail participation. So that's another thing. And thirdly, it's just a lack of IPOs in the market. A lot of companies delisting, the lack of IPOs, lot of the good and the good ones that we like GCash and the SM Prime REIT. Those IPOs are not coming as fast as we want. No,
Yeah.
and especially for big foreign funds, they want big IPOs.
That's right. That's a huge red flag right there. It talks about, market depth and long-term growth, our thin IPO pipeline, and talks of delisting. Basil, what does our government need to do right now? We've got a revamped economic team. What do we need to see from them within the first 90 days to get our market, our equities market, back on track? I mean, this is not just one agency. We've got to work together. The DOF, the SEC, the PSE, maybe even the BIR, all have to get their ducks in a row and help equities. What do they need to do, Basil?
Definitely, it's a step in the right direction with the recent appointments with Frederick Go and the Department of Finance, and Vince Deason. Of course, he's a very credible person. These are steps in the right direction, but I think more has to be done. Firstly, I think if you just look at these government agencies should work hand in hand to actually incentivize companies to go public. The issue with the Philippines is a lot of the big corporates are family owned, so they don't want to list. No, they don't see the incentive to list. So I guess one way to do that is probably give them more incentive, like lowering the tax rates for listed companies. That could be one. Of course, another incentive would be less stringent regulation in the books. I mean, right now, there's a suspension in audits from the BIR, which is, I think, a positive direction. If that is a big source of corruption. So just being more lenient, and the SEC right now, I think there are plans to lower the float requirement. I think for IPOs, 20% is the minimum public float requirement. That is a bit too high, especially for the likes of GCash. If you have a 20% public float for a sizable IPO, that amount of capital won't be able to, the market won't be able to absorb that amount of capital. So just being flexible with the rules, not being too rigid, that will help the markets. Of course, another thing I mentioned, which I've been highlighting, that the SEC did remove the floor in broker commissions last year. But the issue right now is if not all brokers have actually lowered their commissions. The big brokerage houses, the big retail brokerage houses are still implementing the 25 basis point commission. So even if we reduce the STT, that broker floor of 25 basis points is still there for most of the retail brokers. So hopefully they could be more flexible in lowering that broker commission.
Yeah, okay, you mentioned a lot of things. Let's start with the most recent. You mentioned that the SEC reduced broker commission floor rates. This is going to help retail investors. But at the same time, even though they reduced it, a lot of the brokerage firms are still charging the standard fees. A lot of also the people in the PSE have their own brokerage firm. So there's that to contend with. What do you think needs to be done in order to, for retail investors to feel the lower rates as the SEC reduced the floor rates for this?
Yeah, I mean, admittedly, it's a chicken and egg thing. If you see the stock market, as you mentioned earlier, that for the past 10 years, we're the first performing market, which is not a good, article from Bloomberg. But if retail investors see the markets performing well, they will be incentivized to be opening brokerage accounts and putting more in the stock market. The issue right now, just give you some color. If you look at the government institutions like GSIS and SSS, they have $53 billion of AUM and around 20% is in equities. If they just increase their asset allocation by 1%, in equities, that's already 30 billion pesos of dry powder to buy in the equity market, which they need to deploy because they do get monthly contributions from their, I guess, from you and me, from the government employees. No, they get, we contribute on a monthly basis, so they have to deploy that capital. So if you just think about the 30 billion pesos going into the equity market, that could really prop up the market significantly.
That could definitely prop up the market. So you want the GSIS and the SSS to put more into equities, given the dearth of foreign investments.
Of course, and of course, valuations are so cheap as well. No, it's not like we're in the. If you look at the U.S. markets to over 20 times PE, we're coming at 9 times,
They're
significantly
gonna make
below.
money, right? Right.
Yeah.
Just to give us a perspective on how low or how cheap the Philippine market is at right now, we're looking at 9 times PE. Give us an idea of how this compares across the Southeast Asian region, just to give us an idea of just how good the deals are right now.
Yeah. If you just given how cheap the market is, a lot of index stocks are actually trading below global financial crisis levels, or in fact, close to financial crisis levels. And if you, as you mentioned, we're trading at 9 times PE. If the market goes up by 30%, we're still the cheapest market in the region. That's how cheap we are. So
Okay, that puts things into perspective. Another thing you mentioned, Basil, earlier, you mentioned that you wanted the BIR to give tax incentives for companies to go public, given the dearth of companies that want to in this state. What sort of tax incentives? Do you have anything firm on that you would like to see?
I mean, it's up to the DFA and the BRR and the I guess, corporates to discuss this, but just lowering the corporate income tax rate would already significantly, I think, incentivize companies to list. No?
Okay.
So I can give concrete details now, so it's up to them to. But
Right.
that's one incentive I can think of.
Right. Okay. You mentioned the SEC. What about the PSE, Basil? What does the PSE need to do that they haven't already? Over the past 10 years, we've been the worst performing stock market in the world. What does the PSE need to do right now?
This conversion take a long time, but there are a lot of things they really have to fix. I mean, for one, they've already implemented short selling, but nobody is shorting this market because of. It's a long story, but it's more of the software and background infrastructure in place, not yet in place for short selling. Of course, I mentioned about the float requirement. The SEC signaled that they are willing to adjust it lower. I guess just providing these companies more incentive to list. Just to provide you perspective in the region, they have this value up approach where in Singapore, Japan, Korea, they actually promote companies to have good fiscal management, no high ROEs, good buyback program, whether they're able to have returns greater than their weighted average cost of capital or cost of equity, whether they pay dividends on a regular basis, they have a payout ratio. So they in fact measure these companies, and they actually promote companies that have good fiscal management, and they show that companies that do these good fiscal management do perform well in the market.
Okay, last question, Basil. We're super tight on time. If you had 100,000 pesos or 500,000 pesos to invest in the market today, where exactly would you deploy it?
I can't give specific stock picks, but I would say if you just look at how stocks that have done well so far this year and the past several years are stocks that pay a significant amount of dividends, have good ROEs, have good fiscal management. So companies that show consistency in increasing their dividends over a period of time, growing earnings, and have good regulatory environment. So those companies with good management and all that. So basically,
because there are outliers out there. We just need to really find them, seek them out even more so now. All right, Basil, VP and Head of Equities at Security Bank, thank you so much for your time.
Thank you, Maiki.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. We begin with how the U.S. and European markets closed overnight because that sets the tone for trading across Asia this morning. Global shares fell and U.S. Treasury yields rose Monday as investors paused after 5 straight sessions of gains and awaited key economic data that could strengthen expectations of interest rate cuts by the Federal Reserve. Stocks on Wall Street finished lower, led by declines in utilities, healthcare, and industrials. The 3 major indexes had rallied in each of the previous 5 trading days prior. Now, over in Europe, markets there also slipped, with a pullback in defense stocks contributing to the weakness. Now let's check on to see how Asian markets are faring this morning. Right now, the Nikkei 225 is trading to the upside, higher by 0.6%. Hong Kong's Hang Seng Index up as well, up by 0.7%. Shanghai's Composite, however, is going the other way, down by 0.3%. And Singapore's Straits Times Index going in that opposite direction of the Shanghai Composite, higher by 0.2%. Here at home, taking a look at the main gauge as of 10:21 this morning, the PSE Index has some gains. We're higher by 0.2% to the 6,000 level, 60.01 to be specific. All shares index, slight gains there. It's flat with a slight upward bias, up by less than 0.1% to 35.45. Taking a look at the sub-indices, the financials and the mining and oil counters are limiting the market's modest advance. Right now, volume is at 105 million shares traded, valued at 582 million pesos. Market breadth almost neck and neck. We've got 66 advancers, 62 decliners, and 52 stocks unchanged. Taking a look at the currency front, the peso opened at 58.49 to the greenback, unchanged from its previous close. On the corporate front, one of the Philippines' most influential business groups is making major strategic moves, expanding its global logistics footprint while proving the strength of its water infrastructure projects during extreme weather. These developments have big implications for supply chains, resilience, and private sector investment. Enrique Razon's infrastructure empire, that's who we're talking about. They're advancing on 2 fronts, with International Container Terminal Services Incorporated and expanding in Brazil, and his Wawa joint venture demonstrating critical resilience at the Upper Wawa Dam. ICTSI's Brazilian unit, Cilia Puso Alegre, has expanded its logistics center with a 30,000 square meter bonded area, refrigerated storage, and a container depot to boost cargo flows between Rio de Janeiro and southern Minas Gerais. The upgrade also launches the Rio-Minas Corridor, a multimodal route designed to shorten transit times and lower logistics costs, a key advantage for regional trade. Now at home, the Upper Wawa Dam held back floodwaters during Typhoon Uwan while helping maintain Metro Manila's water supply, a critical test for private sector-led water development. Now, we're going to be taking a quick, we've got the next story. The Philippine Competition Commission has cleared the sale of the Caliraya Botocan Kalayaan Hydroelectric Power Complex to the Thunder Consortium, led by Aboitiz and Japan's Sumitomo. Aboitiz Power says that the renewables subsidiary has received formal notice of approval. The consortium earlier submitted the top bid of 36.22 billion pesos for the 797 megawatt hydro complex. The Power Sector Assets and Liabilities Management Corporation, which oversaw the privatization auction, expects to turn over the facilities by February of next year. On another front, Rustan's, one of the country's most established luxury retailers, is warning job seekers about scammers using its name to solicit payments for fake recruitment offers. The Tantoco-led retail group, known for its high-end department stores and strong HR standards, says that it never charges applicants for any application, processing, or training fees. All legitimate communications come only from official human resource channels. The company is urging the public to report any suspicious fee requests to its HR team or local authorities. A timely warning as holiday season hiring peaks and employment scams become more aggressive. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.